let's move on. Let's turn to our next segment, and we call that picks and pans. In other words, what you like and what you don't like. And I'll start this one out, and I'll tell you what I've been doing. I'm not necessarily recommending it for the faint of heart. You got to have have a hearty heart. I've been buying housing. I've been going in and buying foreclosed properties, distressed properties, buying it, and that's I think it's going to be good. Now again, I've got a window of 3 to 5 to 10 years. I'm not. If I had to sell those things in this environment, that would be a bad idea. So I'm picking. My pick is housing right now. Tony?
I still like energy. I like alternative energy. I like technology, and I like agriculture.
Oh, ag, yeah. Like the MOO, M-O-O, the ETF that trades on the stock exchange. You can buy it and get a little bit of all these companies like Monsanto, John Deere, Cargill, and so on. Tim, you got a pick or a pan?
Well, I want to tell you that one of the things that you're seeing in the real estate industry, Ernie, is not so much that it's distressed properties, but it's distressed owners. Okay. And what you're seeing, there's a lot of, especially on the commercial real estate side, there's a lot of opportunities for people with cash. Not necessarily that's telling investors to go out and individual investors to go buy commercial property, but there are a lot of distressed sellers out there right now. I will tell you kind of what's happening in our practice is that we're seeing a lot of clients that are just, the appetite for risk is really dried up. They don't want to take much risk. But there's this frantic search for yield.
Yeah, I know.
So what's happening is that you're seeing this movement toward higher quality companies, high dividend paying companies, and also some corporate bonds, especially on the higher yield side.
Cash is king. I don't understand folks sitting there holding cash. I mean, I wish I had, well, everybody wishes they had more cash, but other things equal, I'm a buyer right now.
Well,
I mean, why people are selling into this environment, I'm like, wow, interesting concept.
The goal here is to create wealth, right? If your goal is to create wealth, you have to own stuff. What we're seeing right now from the Federal Reserve is they've given us a very clear mandate. They've said, or essentially, they've said, look, you're going to get 0% for the next 2 years.
Exactly.
Right. Look someplace else, not here.
Yeah.
And that's what they've told them. We've never had a clearer signal from the Federal Reserve that said you're going to get zero.
Or not,
well, that's a different question. But we've never had a clear and better information to say you're going to get 0% in your savings accounts, unless it goes negative, because we might actually see that some fees charged on that. So go do something else with your money.
Okay.
That's
and there are opportunities abound. Now, if you're short run, if you're looking at 3 to 6 to 9 months to a year to 2 years, can't help you there. But if you're sitting on cash, I mean, I think the stock prices are low now, and now you may buy today and lose some more. I'm not saying it's bottomed out. I don't think it has.
Now that's looking at the world today. What if we do slip into another recession? Yeah. Then where should investors be putting their money?
I'm taking a long run view, and I'm borrowing. If the banks are lending, I'm borrowing. As Tim said, you can borrow. Mortgage rates are at record lows. I mean,
under 4%, close to under 4% on a 30-year mortgage.
And if you got a good credit scores, which we would hope a lot of folks do. Of course, you know, I mean, ours. If you continue to have your job, which we hope we continue, Tim and I, and you as well, Tony.
I'm not so sure about you, but
that's true. You can tell me more about that than I can.
Maybe we'll have to talk, Ernie.
We'll have to talk. Okay. Let's turn to our next segment, and we call that, what are you watching for in the next month? Okay, and Tony's always got his indicators, but Tim, what are you watching next month? What's on your radar screen when it comes across your desk? You're like, oh, that's interesting, or that's...
Corporate profits.
Okay.
Corporate profits continue to be at record highs, and this is the least covered story of the year.
And so even if stock prices go down, the dividend yields may be very strong because they're going to pay out dividends.
Well, the price to earnings ratio, if you flip that around, we call that a yield. On the S&P 500, we haven't seen that this high for many, many years. Now, that's usually an indicator that stock prices have been low.
Or perhaps profits are not going to be as good as we think they are.
Possibly. But even looking forward, though, projected 2012 profits are higher than 2011 profits. So as we look at that, that's the most underreported story right now.
But those are analysts that they're like economists. Sometimes they get it wrong. Sometimes we get it wrong. But I think they're right. I mean, maybe not next year, but as Tony said, entering recession, there could be profits
Sure.
could be under pressure.
Let's bring it all the way around, though, Ernie. Remember that for the S&P 500 right now, over 50% of the revenue comes from outside the United States. So just as you had talked about internationally, these companies are not just American companies anymore. But for right now, for the S&P 500, we're seeing record profits. But at the same time, the second headline, stubbornly high unemployment.
What are you watching, Tony, for next month?
I'm watching job report, which has been dismal for the past
it comes
several
out
months.
October the 7th, folks. Friday, October the 7th.
And I'm looking at inflation.
Okay,
I still think
the misery
inflation
index.
is out
Remember
there.
the misery index. When you put the unemployment rate with the inflation rate, we haven't seen these levels this high since 1984.
Right.
That's good. Okay, you know what I'm going to be watching?
Sure.
I'll call it a Greek tragedy. If there is a Greek tragedy, I'm really concerned. I think there is potential, maybe not in the next month, but within the next 3 or 4 months, Greece could leave the EU, the European Union.
Will they get kicked out?
I don't think they'll get kicked out. I think they'll withdraw because what they want to do is get off the euro and get another currency like the drachma, and devalue it and encourage exports. And
Right.
of course not pay their debts as well.
And what will happen is, I think what you're saying here, Ernie, is that they want to trade a lower standard of living in order to be able to pay off debts. And what's happened right now with the European Union is that they've got separate fiscal policy, but they've got decentralized monetary policy, and they can't cheat anymore.
Much like we have with California, they have this. They share the same monetary policy, but they don't share the same fiscal policy. Is Nebraska, is Iowa going to bail out California? We'll wait and see on that.
One way or another,
we'll have to.
Yeah,
California will not withdraw. Texas may.
Texas may withdraw.
Might withdraw. We'll have to ask Mr. Perry about that. But let's see. Okay. Well, now that's any other recommendation?
Well, I want to go back to
headline.
Let's go talk about the employment numbers here, because I wanted to ask Ernie this. What we've kind of talked about here is the establishment number, or the government number. But there's another report out there called the ADP number.
ADP number.
Explain a little bit of the difference and why they're so different. Because that ADP number looks pretty good right now.
The ADP, of course, is a company that does payroll services, and they provide payroll services primarily to smaller companies. So it's a small versus the big companies. So I would say I think you're right, Tim. Got to watch that ADP number. Maybe it's telling us a different story than the government number. So maybe the small businesses are hiring, and that's what we're seeing right now.
And that's a good thing.
That obviously a good thing. Tony, any other headlines you want to see, or?
Well, headlines that I think would be interesting maybe next month is we actually may see a headline that says the president proposes tax cuts, which would be shocking.
Yeah, which I think, Tony, you've been spot on. He's going to prepare. He's, of course, now we're recording this before his speech on Thursday. He's going to propose a cut in the Social Security payroll taxes on the employer and the employee side, probably.
Probably. And I think that's. I mean, this must be the first time to be on record that he actually is in favor of actually not increasing taxes more.
Yeah, and now what about the Bush tax cuts which expire in end of 2012?
Well, that'll be after the election.
So
he'll let those expire.
Now back to that certainty point, Tim. If we could say
where's the permanency? That's
our hero Milton Friedman, who his permanent income hypothesis, meaning you got to do something permanent to change. If you want to change behavior, change it, make it permanent. So that's what
I think that's absolutely right on, because I think so many people are looking at these temporary things as just that. Okay, they're temporary. I know it's going to get worse. I know that overall the intent is to raise my taxes, so I'm going to save this money now and not spend it, and it's going to have the adverse effect.
Well, good point.
You're not going to triple the size of your air conditioning if it's 100 degrees tomorrow, right?
Yeah, right. Yeah,
but it's exactly so. You know that in the summertime you're going to use your air conditioner where you can, but you're not going to triple the size just because we've had a string of 95-degree days. Right. You know that but if you have some permanency there, and you know that it's always going to be that hot, then you will upgrade your air conditioner.
South Florida, you better upgrade that AC.
But without permanency in policy, people just look at they ignore it, or that makes them worry more.